What good traders? Welcome to another conversation whereby I wanted to get to talk about what is that trading confirmation method that you get to implement or you get to put in place before taking any trade. Remember, you might be good, you might be very conversant when it comes to technical, but having a wrong entry method, these might result to unnecessary losses. And remember, when it comes to trading, because it's more of a probability game, you need to get rid of those unnecessary and reckless losses, because by the end of the day they are going to affect your winning rate. So it's very important that you be very precise when it comes to your entry model, how you get to take those trades, and of course let it be something that you can get to do over and over. And this way you're going to be more confident, understand the entry strategy more better, and of course by the end of the day it helps you to get rid of those unnecessary losses. So I have a couple of things that I get to check in every trade before taking any trade, and this is more of I would say this is more of the framework of any trading strategy out there. They might sound different when it comes to how they get to refer to a few terms, but by the end of the day, it's the same concept. And number one in my these that is my trading confirmation method is whereby I get to look at the market structure. Any strategy may be supply and demand, it may be support and resistance, ICT, SMC. Any trading strategy, it has to have a market structure. And with market structures, whereby is the market on an uptrend, is it on a downtrend, is it on a ranging, is it consolidating? This is basically what makes the market structure. And in order for you to understand the market structure, you need to understand, is it the market making new high highs, new lower lows? Is it making new that is new lower highs, new lower high that is lower lows? This is basically is the market on an uptrend or on a downtrend. And also another important thing to understand is that it's important that you get to make trending. That is the trend, your friend. You have always to make sure that you get to trade with the trend, because you don't want to stand in front of the market or trading against the market, because most of the time the market is going to squeeze you and of course end up hitting your stop loss. So it will be more convenient for you and easier for you, and less of course have make trading easier for you if you get to just ride with the market, and by this just follow the trend. If the market is on an uptrend, just look more of buys. If the market is on a downtrend, get to look for more of sells. For my case, I don't like trading ranging market whereby it's not in a clear direction, whether on a downtrend or an uptrend. I get to opt to stay away of such market. But there are those people who are a bit good with that. But it really depends with the strategy and what you have understood in the charts. If you are good when it comes to score to ranging market, well and good, wish you luck on that one. But for my case, I get always to position myself with the trend. And this is where the market structure, it's a big thing for you to understand. So check out whether the market is making new high highs, new higher lows, or is the market making new lower lows or new lower highs? And that way, just position yourself just behind the market, and sure enough, you'll find you'll make more wins than losses. The other important concept is whereby we get to talk about the market levels. What do we basically mean by this? This is when we get to talk about zones. Some people might call supply and demand, but for my case, I'm comfortable on with support and resistance. These are basically zones. These are areas whereby you see the market having some difficulties either to pass through, or the market could be bouncing from. So it's very important that you get to understand how to draw these zones and how to position yourself when the market gets to break or gets to bounce off these zones. So for my case, I get to draw my zones at daily time frame. That is support and resistance. I get to outline them at the daily time frame. I get to find these zones, they are more respected. And of course, if you get to have a good stop loss, now you get to place yourself well, the market really gets to hit your stop loss. So it's very important that you get to understand that. Also, another thing that I've seen with day traders, like my case, who am saying traders, so for the case of the day traders, because they want a very big risk to reward ratio, they get to squeeze in their stop loss. Sometimes this might work against you, especially whenever the market have some sudden volatility, maybe from news. You might be stopped out, but it doesn't mean that you are wrong. You get the market, you just being stopped out by the spread or just by a week, and then the market gets to head to your direction. So it's important that you also get to have some reasonable stop loss, and also add some allowance, a few pips for you, just in case. So for the case of the swing traders, I don't have a standard specific stop loss. I've seen some day traders as cappers talking about 30 stop loss. For my case, I don't have. I just get to position myself as per what the price gets to show me, and of course, what I get to see as per the chart being the appropriate place to put your stop loss. So it's very, very important that you get to understand how to draw zones, spot these zones, as well as when it comes to the entry, make sure you get to have your stop loss positioned the right way. The other thing is whereby we get to talk about the price reaction, or basically price action. So for my case, I'm more of a trader who gets to focus on what the market is showing me. We're talking about the chart patterns, the candlestick formation. That is basically what price action is. So in this one, you need to understand what particular candlestick mean, and of course what they get to project. We are talking about things like rejection of candles, engulfing patterns. All these are the things that I get to focus on my strategy, and I'm very big when it comes to candlestick formation, especially on the zones. So I get to combine the market structure. I get to draw those zones, as well as I also get to look at how the candlestick are forming, how the candlestick closed before taking an entry, as well as is there any chart pattern that I'm seeing being formed. So it's very, very important that you get to understand that. So for instance, you don't get to see a reverse or an inverse, a reverse pattern forming on an uptrend, and then you're out there taking more buys. You need to position yourself, or you get to give it more time for it to align as per the direction that you're looking to go. So for instance, if you get to see head and shoulder, you should be looking more of selling opportunities, especially at higher time frame. So a chart pattern is something that I'm really, really big on, and I would advocate understand the chart pattern, the candlestick formations, because they are going to help you to avoid so many unnecessary losses. And the last one is whereby you need to have a reasonable risk to reward ratio. You don't go to 1:12 and you expect to hit your take profit. For my case, I get to go for 1:2, and I'm comfortable. I've been comfortable with that, and in the long run, I get to make money off the market. So it's very important that you get to have that in mind. So having a risk to reward ratio which is reasonable, it's a very, very important thing for you to understand. That's what I had for you when it comes to trading confirmation method. That is trading entry confirmation method, as well as trading generally. So hopefully you have learned one or two things in this one, and I would really, really appreciate you if you get to leave me some feedback. Let me talk to me on what you are struggling with, and of course maybe we can get to assist each other in the long run. Peace, guys, for now.